Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now, even though the trend is still bullish on the daily time frame, there's some warning signals beginning to flash here in the shorter term that we need to pay attention to. So I'll be talking about that in just a moment. Definitely stick around. First of all, just giving you a quick update here on the daily Bitcoin chart. And as of right now, technically speaking, the trend is still a bullish trend on the daily time frame because we're still seeing higher lows and higher highs as of right now. And of course, the same can be said for the daily Bitcoin RSI and also the MACD, still showing quite a lot of bullish momentum on the daily time frame. But with that being said, like I said in my last video, the price is running into this resistance, which is the golden pocket coming into play in between around 20.9k to 21.2k. So just in that $300 price range right there is the immediate resistance that I'm paying attention to. And when you combine this with the fact that the daily Bitcoin RSI is extremely overbought, this is basically telling us that we're due to see a bit of a correction, or at least some sort of pause from this bullish trend so that the RSI has a chance to cool off and reset. And now this doesn't necessarily mean that this bullish trend right here is over, but what it does mean is, once again, we're due to see a bit of a pause from the trend, kind of like right here, for example. This still occurred within this bullish trend, but of course we saw some shorter term bearish price action throughout that cool off. And now if the Bitcoin price does experience this short term pullback, which is technically the most likely scenario based on the RSI and the price getting rejected from this resistance, then in the case of a potential pullback here, we're very likely to retest around the $20,000 level. But in terms of support, we have support at around 19.7k approximately, and even more significant support down towards around 18.6 to 18.7k. And now, even if the Bitcoin price corrects all the way back down towards around 18.6 to 18.7k, that would still not invalidate this bullish trend, because obviously in that case, let's just say if we formed a low around there, we would still be forming higher lows and higher highs on the daily time frame. And also something like that would actually open up the possibility for a giant inverse head and shoulders pattern to potentially be forming right now. But also, like I said in my last video, we still need to actually confirm a right shoulder and a breakout above this golden pocket in order to actually confirm this potential inverse head and shoulders pattern that could be forming right now. And so overall, in terms of the trend here on the daily time frame, I'm still currently bullish on the trend, but it's just in the more shorter term, we could be due to see either some sideways price action at least, if not more likely a bit of a pullback in the price of Bitcoin, because both pullbacks and sideways price action actually help reset the RSI back down towards neutral levels, which can give us some more room to the upside later on. And now when you zoom into the shorter term, looking at the 1 hour Bitcoin chart, right now the price of Bitcoin, looking at the 1 hour candle closes, is forming horizontal highs, while the 1 hour Bitcoin RSI is obviously forming lower highs, which is technically a form of bearish divergence. Now, this isn't the strongest type of bearish divergence because that would be higher highs in the price and lower highs in the RSI, but this is still technically a form of bearish divergence, which is currently active on the 1 hour chart. And so due to this, we're most likely going to continue to experience a bit of a short-term cool-off from this bullish trend right here, which once again doesn't necessarily reverse the bullish trend into a bearish trend, because obviously throughout this bullish trend so far, we have seen a few bearish divergences, which have essentially resulted in one-day pauses from the bullish trend before continuing higher later on. And already on the lower time frames, like this 1 hour time frame right here, the RSI has already reset back down towards more neutral levels, which is exactly what we need to see, but we also need to see this on the larger time frames like the daily chart as well. Because while the daily Bitcoin RSI is like this, we have somewhat limited room to the upsides, which is exactly why these short-term corrections are necessary for a sustainable bullish trend. And now, probably the most important short-term warning signal to pay attention to are the Bitcoin funding rates. And this can also be said for all of these other coins as well, because because right now these funding rates for most of these coins that you can see here on the screen across most of these exchanges are almost all back into the positive, and in fact on some exchanges they are well into the positive region, in fact higher than the neutral level, because usually these funding rates tend to sit at around 0.01%, but as you can see here on some of these exchanges for some of these coins, the funding rates have gone quite a bit higher than 0.01%, which basically means there's not as much short positions in the market right now, considering a lot of short positions got liquidated over the last few days, and there's most likely new long positions late to the party opening up more recently, which is actually not a good sign for the price, because obviously, as I explained in more detail in my last video, a lot of the recent rally over the last few days was fueled by a short squeeze, basically short positions getting liquidated, pushing the price higher and higher, which liquidates even more short positions, pushing the price even higher again. But if pretty much all of the short positions have already been wiped out and new long positions are opening up at these local highs, then that does actually increase the risk of the opposite happening, because obviously the opposite of a short position is a long position, and so when long positions close or get liquidated, that pushes the price further to the downside, which liquidates more long positions and has the opposite effect to a short squeeze. And basically, the higher these funding rates go, the more likely something like that could happen, but in the opposite direction to what we've just seen, because basically these funding rates go to the upside when there's been more people pile on to long positions and pushing the price of the derivatives market higher than the spot market. And also, the higher these funding rates go, the more expensive it becomes to maintain a long position, because basically the longs have to pay the shorts when the funding rates are positive, and they have to pay whatever the funding rate actually is. So obviously, the higher the funding rate, the more the longs have to pay in fees to the shorts. But on the flip side, if these funding rates are negative, that means the shorts have to pay the long positions a fee, usually every 8 hours, which is once again calculated from what these funding rates are. So if these funding rates are well into the negative territory, it becomes quite expensive to short, and that increases the probability of a short squeeze happening. But on the flip side, if these funding rates go well into the positive region, then it becomes more expensive to long, and that increases the possibility of a long squeeze happening. So at this stage, considering the funding rates for most of these coins across most of these exchanges are no longer negative, it's pretty much safe to say that this short squeeze is now over, which means at least for now that has taken away a bit of fuel that was pushing this rally forward. And in order to continue this rally any higher, we would basically need to see more buyers step into the market, basically FOMOing into the pump, for example, because most of the short positions have already been wiped out. And over the next few days, I will be keeping a close eye on these funding rates, keeping you up to date in these videos and in real time over on my Twitter as well, link down below, because like I said, the higher these funding rates go, the higher the probability of a potential long squeeze. But either way, we are due to see a bit of a cool off anyway due to this short-term bearish divergence and the RSI on the daily time frame well into overbought territories. But anyway, now getting into the Ethereum part of this video, this right here is the weekly ETH to US dollar chart, and obviously the price of ETH is still experiencing this massive breakout from this giant bull flag pattern, which could potentially be seen as a bull flag, but it's not exactly a textbook bull flag, as I explained in more detail in my last video. But obviously, if it were to play out like a bull flag, then that sets up a technical price target just here at around 1.9k to $2,000, which is pretty much where this high is sitting at. But zooming in a little bit closer into the daily ETH to US dollar chart, over the last one day, we have now seen a daily candle close above this 78.6% Fibonacci level, which is sitting at around 1520 approximately. And so far, the price of ETH, as of recording this video, is actually retesting this level. And so it's very important for the price of ETH to hold above around 1520, because otherwise, if we see a daily candle close back below around 1520, then it's very likely we would continue to drop back down towards around 1420 to 1430, which is where this previous golden pocket is sitting at. And below that level, we have even more significant support down towards around 1340 to 1350. But either way, like I said, for Bitcoin on the daily time frame, the daily Ethereum RSI is also well into overbought territories, which basically means we're due to see a bit of a pause from this bullish trend here on the daily time frame. And we've already seen a little bit of this happening on the smaller time frames over the last one day, like here on the 2-hour time frame. You can obviously see the price of ETH pretty much chopping around sideways for the last one day, while the 2-hour Ethereum RSI is pulling back down towards around neutral levels. But unlike the short-term Bitcoin chart, we don't actually have a bearish divergence here for ETH, because even though we have lower highs in the RSI, we also have lower highs in the candle closes here in the price action, which is obviously not a divergence between the price and the RSI. But either way, we're still experiencing a bit of a call off because the daily RSI is extremely overbought, and this is already helping to reset the 2-hour RSI, like I said, which is potentially giving us some more room to the upside in the immediate shorter term. But like I said, for Bitcoin earlier in the video, we still need to see this happen in the RSI on the daily time frame in order to continue this daily bullish trend. But overall, I am still remaining bullish on the trend on the daily time frame. It's just in the more shorter term, we're due to see a bit of a pause, either sideways price action at least, if not a bit of a pullback, probably more likely in the somewhat shorter term during this bullish trend. And now, if you want to know how to maximize your profits in crypto, no matter if the price is going to the downside, to the upside, or even chopping around it sideways, then make sure to check out these videos popping up right here on your screen. The video in the top left shows you how to make money in crypto if the price is going either up or down, and the video in the bottom left shows you how to make money in crypto if the price is chopping around it sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.